Is there a way to improve and streamline my existing estate plan? How can I get more tax savings and more tax deductions? Can I pass along these enhancements to my beneficiaries for generations to come? A certain four-letter word is the answer to all these questions and is the focus of this video. First, a quick introduction to our firm. Kelleher Holland is a full-service law firm with over 50 teammates, with 3 locations in the Chicagoland area, plus an office in Naples, Florida. Our attorneys are licensed in multiple states throughout the country, giving us a national presence, and our affiliation with Mackerel International Legal Network gives us a global presence as well. Providing 360 degrees of personal and business services means we are your one-stop legal solution provider. One of our flagship practice areas is estate planning. Pictured here is our estate planning and trust and estate administration groups. We are dedicated to helping you preserve assets and minimize taxes during your life and beyond. Back to the questions posed at the beginning of this video about how to maximize the value of an estate plan. The answer is BIAT, which stands for Beneficiary Income Accumulation Trust. BIAT provisions streamline most new and existing trust plans in all states throughout the country, both revocable and irrevocable, and can provide more multi-generational transfer tax savings, estate tax savings, and income tax benefits, easier tax administration and streamlined tax return preparation, and enhanced long-term creditor protection. And almost anyone can benefit, whether single, a surviving spouse, married, a traditional or blended family, second or more marriages. BIAT can maximize your estate's value for generations to come. The best way to explain how BIAT works is to review what we call the old-fashioned income tax trust planning method. Today, our example will use the Weber family, Fred, Susie, and their children, Todd and Tyler. Many people typically have revocable living trust plans in place, like Fred, with Susie being the primary beneficiary. But what happens when Fred passes away? Under the old-fashioned method, Susie and the trust are separate income tax payers. Let's suppose the family trust has $4 million of assets in it, and at 5% return, makes $200,000 of income per year. Assuming Susie wants to keep the income in the family trust, and there are no cash distributions made out to her, the trust files a Form 1041 with compressed tax brackets, and the trust pays a significant amount of income tax. In order to avoid the high tax brackets associated with keeping the income and associated cash in the family trust, all the cash related to the net accounting income from the trust is distributed to Susie annually to be reported on her personal Form 1040, which gets her better tax rates. But now the income and associated cash is in Susie's name alone, which means it may be subject to estate tax at her death, and she lost the creditor protection of the trust. And the family trust still has to file a separate income tax return, which means more paperwork and tax preparation fees. In most situations, this old-fashioned way of planning has become antiquated. Although this method of distributing income out of the trust to Susie achieves better income tax brackets, it misses the mark with issues such as estate tax planning and creditor protection. BIAT provides a more modern and streamlined solution. With BIAT planning, the family trust and Susie are the same income tax payer. Because Susie has an annual income withdrawal right, she is the deemed owner of the family trust for income tax purposes. That means both the family trust's income and Susie's income are reported on Susie's Form 1040. Why is this a better solution? Because Susie has choices. She can choose to keep all of the cash associated with the trust's annual income inside the trust, paying the trust's income taxes either with her own assets or withdrawing just the amount of cash from the trust to pay Uncle Sam. She can also choose to withdraw all of the trust's annual income. But wait, there's more. Because Susie and the trust are the same taxpayer, we can avoid many administrative headaches. For example, If the $4 million in the trust grows and there is a lot of capital gain, and Susie invests in assets outside the trust and has a capital loss, she can easily offset gains with losses, since Susie and the trust are the same taxpayer. The old-fashioned method makes this a more cumbersome process. The trust can hold the S corporation stock without complications, since Susie and the trust are the same taxpayer. The Internal Revenue Code contains multiple deductions and exclusions that, without BIAT planning, Susie would not be eligible to receive. For example, if Susie's house is in the trust, BIAT allows her to get the IRS Section 121 exclusion of up to $250,000 of capital gain when she sells it. It also provides business owners their ever-popular 179 expense deduction. And if you and your spouse have separate irrevocable trusts requiring multiple tax returns, BIAT can simplify that process, and in most cases, reduce the number of annual income tax returns to be filed down to 1. BIAT cuts through the red tape by simplifying not just income tax brackets, rates, and paperwork, but gives our clients more opportunities to get deductions, and many times reduces professional administrative tasks and expenses every year. So what have we learned so far about BIAT planning? Let's compare the two methods. Although it is possible to get the same lower income tax brackets both ways, BIAT provisions also provide enhanced income tax deductions, and by allowing Susie the choice to keep more value in trust, she can get preferable estate, GST, and transfer tax planning, as well as enhanced long-term creditor protection. And although this is a new way of thinking about estate planning, the methodology behind it is sound and long-standing. The BIAT planning offered by Kelleher Holland is based on BDOT provisions, which come from Internal Revenue Code Section 678, and the case law and tax code regulations have been around for decades and are well established. Back to our example with Susie. Over the course of her lifetime, Susie has the option of keeping the income and associated cash inside that trust every year. As the value inside the family trust continues to grow, the trust keeps the assets held inside the trust both estate and GST tax-free, and provides long-term asset protection for her and her family. And when Susie passes away, the benefits continue. For example, if there are separate descendants trusts created for Todd and Tyler, they get all the same BIAT benefits, and the family assets continue to be protected. They also have the choice to keep cash in trust to provide major tax savings for them as well, providing benefits on a multi-generational scale equating to decades of savings. Now that you've seen the power of BIAT planning and how you and your family can benefit, let's review the ideal candidate for this type of planning. BIAT provisions can be considered in most new and existing trust planning situations: singles, surviving spouses, couples, families, business owners, just about everyone. And when used with IRA or retirement benefit planning, BIAT provides additional asset protection. There are several scenarios where BIAT provisions may not apply. Those with special needs planning or charitable trusts, those with concerns about a beneficiary's fiscal responsibility or current creditor or legal problems, those with beneficiaries in a high income tax state, or if there is no desire to give the beneficiary any withdrawal rights, or those with beneficiaries that would want to have trust income distributed to other beneficiaries. But for those who decide this type of planning is the right choice for them, BIAT can bring added value. The bottom line is, BIAT gives you more. It allows more assets to stay in trust at preferable income tax brackets, gives the owner and their beneficiaries more choices, and provides more estate and GST tax savings, allows more income tax deductions, and provides more creditor protection. Contact us to schedule a free consultation to find out how BIAT can give you more.